Fundamentally, I think the market's at a very, very crucial juncture. So we're coming through a huge earnings deceleration cycle where earnings were flattish or did not grow. I think for the first time this year, we're going to end with double-digit earnings growth for the Nifty. And from here to the next 3 years, you're a compounding of 23% and earnings doubling in the next 5 years. So which is very significant for a large market like India. So I think that is one. Earnings, the multiples are also reasonable, though headline P multiples could be slightly higher on a trailing basis, but there are a lot of pockets of value that are existing in the markets now. So fundamentally, we are very sweetly poised. The risk to the market on the fundamentals is actually the continuity of the government. Remember, the earnings of the Nifty are being driven by the banking stocks, which will be coming out of a huge down cycle. And people are anticipating and building position that the resolution in the banking system will take place, profitability will return to the banks, and that is going to drive the Nifty. Secondly, also is that you had a problem with the NBFCs where there was a liquidity crunch. I think this will also ease off, and hence you're seeing a bounce trade which is currently happening. Second important point is all the cyclical industries like the real estate, your the capital goods cycle, where are seeing very nascent recoveries. If there is a change in the incumbent government, this could get pushed out, which could be a risk to the market. So that is why I think a continuity at this juncture, more so in this election than the previous one, is very important for the markets. So I think what the market is pricing as of today on the elections is clearly the incumbent government coming back to power. I think that is what you can see in terms of the risk aversion that is actually was elevated after the Madhya Pradesh and Rajasthan loss is actually coming off. Frankly, there's been no change in the earnings numbers since then. What was that the risk was elevated, now it's coming off and the market's re-rating. And that's why you see a lot of mid-caps which are moving up. What the market is not pricing in as of now is a very large victory for the incumbent government. And why are we anticipating such a large victory for the government is that clearly this is a presidential election and there is no viable alternative to the current incumbent Prime Minister. So if the win is about 270 seats standalone BJP or 300 plus, I think the market will shift orbits to beyond the new highs that it's posted today into something which is uncharted territory as of now. So we are in interesting times. Elections do matter, and contrary to what people say that elections don't matter, because the policies are driven by inflation, and inflation drives our nominal earnings, and nominal earnings drive our markets. So I think we are in for interesting times after these elections. Yeah, so currently, if you ask from the countdown to now to the elections, I think prima facie number one, the market is still circumspect about this rally. I think that is the beauty which tells us that this is going to continue in the run up to the elections. But are we going to chase what got beaten down? Possibly no. I think when you align yourself to such large changing facets of the market, you need to probably anticipate what's going to rally in the next term of the government. Remember that the first term was very socio-capitalist economy, and probably India will shift gears to a capitalist economy under the new incumbent government. So I would bet on high cyclical recovery stocks and would want to place my bets on some of these new sectors which have been beaten down or ignored by the markets. To name a few, of course, banks is number one out there. Second is real estate, and third would be possibly capital goods and infrastructure, and maybe even power utilities. And this is very different from what ran in the last 3 to 4 years. So I think we'll look for opportunities out there and align our portfolio accordingly. I think the sectors that will be vulnerable if the market sees a disappointment closer to the elections will prima facie will be one is the mid and small cap stocks. They've seen a good risk off trade which is helping them to post some gains. There's some continuing momentum in these stocks. I think that will halt. Number two, of course, is the banks, because the banks have been seeing renewed interest and participation. and clearly, that trade will be off the table, at least momentarily, till people try to reassess what's happening in the markets. I think these are the two most vulnerable areas in the market if the results are not as per expectations. My pick for the year is Reliance Industries. Remember that the company is coming out of a 10-year capex, and its investments are aligned to India's future generation, be it telecom, convergence, or for that matter, retail. It is no longer a refinery company or a petroleum company. Remember, which is India's largest retailer? It's Reliance. Which is India's largest telecom player? It is Reliance. Which will be India's largest internet company? It will be Reliance. When this triple play comes into force, Reliance will be India's Alibaba. And Alibaba trades at $300 billion market capitalization, whereas Reliance is only $100 billion. To reach Alibaba's EBITDA numbers, possibly Reliance will take another 5 to 6 years only. But the journey in terms of its market cap implies 25% CAGR. So I think for a large cap to deliver that kind of return is phenomenal. And these are conservative estimates. My imagination cannot fathom if it lists globally, because it will be the only gateway to the world for India's largest consumption market. I think this context has not been appreciated by the market, and which we can understand from the under ownership in the stock. I think people should, be constructively aligned to Reliance if they want to play India's next demographic boom. And there is no other company better placed than Reliance to capitalize that.